Ruchi Bhatia caught up with the Chief Economic Advisor, Subramanian, to understand whether he believes the forecast is fair despite the reforms that the government has doled out to boost the demand. Listen in.
These would be, I would say, there has been some downward revision, but I would continue to emphasize that in the long run, the fundamentals remain unchanged, and therefore we will be back to the growth rate that we deserve to be at in the near future.
Okay, let me also talk about the NPA crisis. There has been a lot of talk about that. The IMF has also pointed out to the banking sector, and they've said that more reforms are needed. The banking sector also has become the central focus between the war of words between the finance minister as well as the former chief economic advisor and the RBI governor Raghuram Rajan. You yourself have been meeting the banks. You heard them out along with the finance minister on Monday. Every time when we say that the worst is behind us in terms of the banking sector crisis, and then issues like, and cases like the PNB fraud case and the PMC crisis that's been, coming out, they hurt the sentiment. They, once again raise questions on the health of, the banking sector. When can we say that all these things will be put behind us? You have said that, these things took a long time, so the winding down effect will also take that much more longer. But when can we say that, okay, now, we can start from a clean slate?
So I think we have to make, be careful in understanding the distinctions, in the question that you've framed. The urban cooperative banks have a different set of issues. Even for instance, some of the Nirav Modi episode, for instance, that happened. These are aspects that are, yes, they actually are related to overall, the banking operations. But when we've been talking about on NPAs primarily, it is on the lending practices, and there is, improvement in the process of lending, and I think. Especially the fact that commercial decisions are being allowed to for banks to decide by themselves. There is, as one would expect, and in fact we've seen in the data as well, banks have become more careful, and which is something which is expected. So my sense is that the NPA crisis, that we've gone through, has made us aware of some of the aspects that we need to be thinking, more deeply about, and which we are doing.
Since you're saying that you're thinking more deeply about what's brewing in the banking sector, which direction
I wouldn't say brewing. I would say actually, these are aspects that we need to think about, and aspects that we may need to tweak or fix.
Okay, but which direction should we move in? Because the IMF has also pointed out for the need of reform. So what exactly is it? Because the government has adequately capitalized the PSU banks as well. We're pushing the mergers for PSU banks. But where from here? Administrative reforms have been done. What
so
more?
On the banks, I would actually, and this is something which, I have been advocating. World over, banks use a lot of technology to be able to make their lending decisions, very well. In my own work, on this in this area, I've seen how the predictive modeling can be very, very useful. So one key area where I expect that there could be substantial rewards from investing in is using a lot more technology, a combination of artificial intelligence, machine learning, etc., not only to screen borrowers, but also to monitor them regularly. Because when you give a 5-year loan, the assessment of the credit, let's say at the start of the loan versus maybe 1 year or 2 years down the line can change, and it's a dynamic scenario. So the way we've been able to implement so much of technology in many other areas, I think our public sector banks need to be really investing a lot more in technology to be able to screen borrowers, because the primary focus has to be on the larger borrowers, being able to actually assess them and monitor them well. which is something which I would say in this context the mergers actually would help, because investments in technology require a certain scale, the economies of scale, because technological investments benefit from economies of scale. So those would actually be a good, so this would be a good moment, opportune moment to be able to invest in cutting edge technology, which is what banks world over are doing, and which our public sector banks also need to be investing in, and that's something that we are working on.
This has been the festive season, and we at ET now have something called Nai Shuruaat, Naya Saal, Nai Shuruaat. At this point of time, you've been reviewing the banking sector very closely, and the banking sector has they've also been giving out loans in a big way. Almost over 80,000 crores is what we heard from the government on that. But having said that, sir, the RBI in a report recently, they've said that credit growth is at a 2-year low. You have said that that there is some sort of the banks have been a little more careful. Is it the banks being careful, or is it the fact that there is low demand in the economy for loan takers?
So I think this is a point that we've analyzed very carefully. It's my own assessment that the demand for credit is still pretty okay. If you look at the the breakup in terms of the growth of credit among the private sector banks and the public sector banks, the growth of credit actually, slowdown overall has not been as much in the private sector banks, and that actually, if it were a demand side issue, one would have seen that there should be a equally sort of sharp, let's say, change in both sets, but that doesn't seem to be the case. So as it happens world over, when as they say in Hindi, "Doodh ka jala mattha bhi phuk phuk ke peeta hai." So, and that is a commercial decision. So there is some care that is being taken. I think our public sector banks are calibrating into it, and therefore there's some slowdown has happened in the credit, but I would attribute it not as much to demand side factors. Even when one looks at other data sets, which look at basically loan inquiries, etc., I think the demand for credit is pretty okay, which is basically cycles back to what I was saying earlier about the fundamentals. If, for instance, fundamentals had changed drastically, then demand would have been very, very low.
But don't you think the fact that PSU banks are not lending is also a reflection of...
No, I wouldn't say not lending. Actually, there's been a slowdown in the growth rates of... we have to be very careful with what we say.
But having said that, sir, how would you restore the confidence for PSU bankers per se, so that they lend more? Because they themselves have to be the big drivers in the economy if there is no demand slowdown.
So as I actually have already mentioned, it's technology can make a big difference here.
But that's a long-term thing.
No, it's not a long-term thing. It actually is even just using the data that we currently have. It's a matter of being able to just implement some of those models, and there has been an assurance that's been given by the public sector banks that they will look at this process in terms of the working capital versus, let's say, term loans together. And I think they're also cognizant of this particular fact, and I'm pretty sure they'll actually work on their on what is necessary.
And that was an ET Now exclusive.